Welcome to the Restaurants Care Resilience Fund Zoom. I'm Alicia Harshfield, Executive Director of the California Restaurant Foundation. As the holidays approach, it seems like the unpredictability of life is heightened. That's why it's so important that we remind everyone about how we serve the people at the heart of restaurants. Everything we do, you're at the center of our work. And I wanted to mention, if you have a team member experiencing a crisis such as an illness, an injury, an accident, a family death, they may apply for a grant from our Restaurants Care Relief Fund. I really want to emphasize this important program because we have relief grants for your team members as well. We just awarded a grant to a cook whose joyous occasion of having a new baby turned a bit sad when the baby was born with a condition called HIE, which is when the baby does not receive enough oxygen or blood flow at the time of birth, which can lead to complications later in life and perhaps a shortened life. And we were able to give Christopher a grant to help him as he was off of work for a period of time, being with his son who was in the neonatal care unit and his wife. So that's what this Relief Fund Restaurants Care is all about and why it's so important for me to make sure you know about this fund, especially this time of year. So go to restaurantscare.org and you can download a back of house poster that you can post with all of your other employee notices, and then your team members know about this relief fund. That's my commercial for Restaurants Care, which is one of the programs that we have. All right. You know by now that these amazing monthly support services webinars are provided by a generous donation from Wells Fargo to our foundation. So thank you, Wells Fargo. It is time to jump right into the heart of today's topic, which is about accounting made simple. And I'm delighted to introduce you to our expert, Jean Hagan. She also happens to be on our foundation's board of directors. Jean has owned and operated and consulted in the restaurant industry for more than 30 years. And during that time, she's worked with a well-known national chain, owned a food and beverage company that operated multiple restaurants, bars, and event spaces in the Squaw Valley area, and became the president, CEO, CFO, and shareholder of one of the highest grossing restaurants in California. Today, Jean is principal and leads the restaurant operations consulting practice at KROST. So she brings a unique set of skills to the CPA firm and to us this morning. And with her extensive industry experience, we're very excited to have her here to share some tips for you when it comes to systems and managing your books and all costs related to managing your business. So please join me in welcoming Jean Hagan. Let's get started. Thank you, Jean.
Thank you, Alicia. How are you?
Great. So good to see
Thank you. Good morning, everyone. Thanks for taking some time to spend with me here this morning. So we're going to go over just a few very basic restaurant operations and strategies for, primarily for people that are operating their, their business owner operator business model, which is a far majority of our members at the CRA and also the majority of people in the state of California. So I think the things that we're going to talk about today are really pointed at people that are operating their own restaurants and also doing all the million other things that you have to do in business to keep everything organized. So we're going to try to give you some tips on some things. I have to show you this disclaimer so that you don't take anything I say today and use it without double checking with your resources that you may or may not have. And I also want to say that, since we're recording this, you should feel free after the webinar, if you want to shoot me an email or give me a call with any questions you have. I'm happy to take calls from you, and you can get my contact information through Alicia. So KROST CPAs has been around since 1939. We've always had a big portion of our business be in the restaurant industry. We do restaurant bookkeeping, restaurant accounting, we do restaurant tax work, We've helped all of our clients over the last couple of years with getting PPP funds and the forgiveness of those funds, getting RRF funds and the forgiveness of those funds. And then we've worked a lot with our clients over the ERTC credits, calculating and applying for those credits for our clients. So we're very deep into the restaurant industry. We have lots of different services, so try to touch all the bases that are needed, or kind of try to be an all-encompassing CPA for our restaurant clients. So that's kind of what we do. So a couple of, basics that, when you're busy running your own restaurant, maybe you're the back of the house person primarily, but you're also overseeing the front of the house and the bookkeeping and the accounting and all those things. Sometimes you'll default a lot of the work that needs to be done in the accounting space or in the payroll space to a bookkeeper or to a payroll processing company. But at the end of the day, what we've seen is that two kind of Achilles heels of restaurant operators these are the two things that take down restaurant operators in the state of California, especially smaller owner-operated restaurants, is they're either not calculating what they owe in sales tax correctly, or they are not paying employees correctly, so they end up with a wage and hour situation. So it's really important that you start with a process where you're kind of building a fence around what you want done, and you're making sure your bookkeeper and you're making sure the person that's processing payroll for you is staying within that fence area, so that you're making sure that you're staying within the confines of the law and you're not exposing yourself to some larger liability, like getting a letter that you now owe the sales tax people $100,000 because you miscalculated it for the last 3 years. Or worse than that, when you start getting lawsuits because you weren't paying proper penalties for missed breaks or split shifts or any of those things. So first thing on our list here is creating an organizational chart, which sounds a little schoolish, but it's important. And to do that, you want to know who's in your organization and what responsibilities they're going to take. And then there's establishing an external org chart. So these aren't people that are in the building, but they're people that you're leaning on for resources outside of your organization. The next thing is really understanding what the chart of accounts is, what it means, and why you need to be the one that drives what chart of accounts you're using. And then we're going to talk a little bit about budgets, and then we're going to talk a little bit about technology in the restaurant space, because it kind of ties all these things together. So here's an example of an internal organizational chart. And so this is kind of what you want. It doesn't have to be, I build these in a system called Lucid Chart, but this can be a hand-drawn, organizational chart. And it does two things for you. It shows you, who's in the leadership positions in your company, and then who and what reports to those different people. One of the big mistakes that owner operators make is they have everybody reporting to them. And so their days end up being, 20-hour days. And in between that, they're cooking and helping bus and helping seat people and answering phone calls and looking at reservations. So it becomes, as you get busier or as your business gets more sophisticated, it's impossible to have every single person in your organization reporting to you. So you actually want to sit down and say, here's how I'd like my business to run. Here's how the org chart should look, and here's who should report to who, and try to get the number of people that are reporting directly to you down to 2 or 3 people, so that you can spend real quality time developing those key people in your organization, and they can get the experience of managing other people in the organization. Next slide. So this is the next phase of what we do with an internal organizational chart, is start to build out what it's going to cost us to actually have that chart. You know, what are we going to have to pay key people? What are we going to have to pay a general manager? What are we going to have to pay an owner operator? By the way, that slide says 41,000 something for a general manager. I don't think that that's the correct number anymore. And I'm just going to do this real quickly so that you guys, because a lot of restaurant operators don't understand the difference between an exempt employee and a non-exempt employee. Okay. An exempt employee that is somebody that's working on a salary for you and needs to have management responsibilities to justify them being a salaried position. And non-exempt people are people that are hourly people, are working for you on an hourly basis, and they're just getting paid on an hourly basis, including overtime, double time, split shifts, meal break penalties, all of those things. So that calculator, when you're deciding to put somebody on, you know, on salary in the state of California right now, I think I'm still right because I'm in Los Angeles, so it's a little bit different here. But I think we're still at $15 an hour, aren't we, Alicia, in the state of California as a minimum wage? I asked that question because we're at 1604 here in LA. So the math on this, and you guys are going to want to write this down. So that's $15 an hour times 40 hours a week times 52 weeks in a year times 2 means that the minimum salary that you can pay someone in the state of California is $62,400. So you can't pay somebody as a salaried employee less than that amount of money. So I'll just go through that real quick again so you guys can do the math again. So you're going to take $15 an hour times 40 hours a week times 52 weeks in the year times 2 gives you the minimum amount that you can pay a salaried person here in the state of California. So you might want to go back and recheck. And I'll tell you that the reason they're very strict about this is because they're trying to protect employees from being put on salary and then being worked 50 and 60 hours a week, you know, people taking advantage of the salary status. There are other benchmarks in labor law. You know, somebody that's on salary is supposed to have management responsibilities. They're supposed to be, you know, overseeing employees, supposed to have hiring and firing and disciplinary, you know, control over employees. So be very careful because we're seeing a lot of labor lawsuits coming in regarding this exempt, non-exempt status. So don't take advantage of the exempt nature of an employee's pay. Do it the right way, make sure they're being paid right, and make sure that they're being used correctly as a management. And by the way, remember that once they're in that salary position, they're no longer able to be in a tip pool. So that's the other thing you have to be careful about. Okay, next chart. So this is what we call an external org chart. And this is really important for you to take some time. Again, it doesn't have to be a formal chart like this. It could just be hand drawn. But you want to think about who you're going to use as an external resource, okay? So in this one, starting over on the left side, they're using a medical consultant. A lot of restaurant companies do this. Make sure that you're in line with all the things that you have to know about, you know, what you need to provide for your employees, keeping records and doing all that stuff. An accountant, which is typically a CPA because that's the person that you need to do your tax work at the end of the year. But you might also use your accountant, like my firm, for bookkeeping and accounting, for different filings that have to be done throughout the year and keeping you compliant with those filings, and then doing your tax work. On this chart, they have payroll services under the accountant. So in this particular organization, they have an accountant that also processes payroll. I'm going to go back and warn you again that you can have anybody in the world processing payroll for you. You can have Paychex or Paylocity or ADP. They can be processing payroll for you. Or you can have an accountant processing payroll for you. but they are not the responsible party as to whether or not that payroll is being processed correctly, meaning you're paying the correct meal break penalties, you're paying the correct split shifts, you're paying the correct overtime and double time. So be very careful that that responsibility still sits with you, and you need to know enough about those processes to be able to double check it. In this case, they have a business attorney and a labor attorney. I'll tell you that you usually only use a business attorney when you're creating your organization. You don't usually keep them around forever. A labor attorney is a smart resource to have. Maybe you have them on retainer, so you can call them when you're going to terminate somebody, or you have a harassment claim that came in, or a workers' comp claim, or any of those things. And we often tell our clients to have a labor attorney on retainer. You can get them for not a very expensive retainer, or against a certain number of hours a month or a certain number of hours a quarter. But it's always great to have a relationship with somebody, have it in your pocket for when you need it. An insurance broker, and we use the word broker here, not an insurance agent, but an insurance broker, okay, is a very important piece in the external org chart. This is somebody that will go out and shop. The nature of a broker is they don't work for a specific insurance company, so they can go out and shop your insurance and see, what the best price for what you need is. So that's why we like to have a relationship with a broker. They can go out and they can do your liability insurance, your workers' comp insurance, your property insurance. They can probably also do your workers' comp stuff. So you want to have a relationship like that. And then in the restaurant space, PR marketing, relationship, have a lot of discussions with clients like this. Everybody seems to think they're an expert in social media. You're not an expert in social media, I can tell you. And you need to have a strategy and a plan on how you're going to use social media, what you're going to do on PR, how are you going to get on those best lists that come out through Eater and through your city and your local newspapers. You don't have to spend a lot of money with PR and marketing, but it's good to have a relationship and to carve out what they're going to do and what you're going to do internally to make sure that people know what's going on in your business. So that's an example of an external org chart. So we're going to jump into the chart of accounts. So again, this goes back to you're hiring a bookkeeper, you're hiring a CPA, you're hiring somebody to do your accounting. You need to make the decision about what your chart of accounts is going to look like. We at my firm use an industry standard chart of accounts. And the reason we do that is because we want to be able to compare, I might have 10 Mexican restaurants in my portfolio, right? And if they're all using the same chart of accounts and they're all using that chart to create their financial statements and their bookkeeping data, then I can look across the platform and see, if where there's variances between the different Mexican restaurants that we represent. So I can call up a client of mine and say, listen, I don't know what's going on, but all my other clients only have 1% of their sales going to linen, and you're at 2.5%. What are you doing with linen that makes you have that much more expense in it than all the other Mexican restaurants we work with? So we like to have a consistent basis to do all the accounting from, and that starts with the chart of accounts. Next slide. So this is an example of an industry standard chart of accounts. You can see over on the left-hand side are what we call the general ledger codes, and then what financial grouping they're in on the financial statement, and then a short description of what goes into the different codes. So it's this simple to know how your data is going to end up in your financial statements. And obviously it's important because you're going to use that data to run your business, but you're also going to use that data when it comes time to file your tax returns. So you want the data to be consistent within the industry, but you want it to be consistent so that every time you look at a financial statement, you know what's going into the code 6150, expo labor expense. You know what employees are going into that. So you can get an example of an industry standard. This is Deloitte is the leader in that. Most of the National Restaurant Association, the California Restaurant Association, most restaurant associations default to the Deloitte chart of accounts. That's what we all use as an industry standard. So take the time with your bookkeeper when they're setting up the QuickBooks file to say, ask a simple question. What chart of accounts are we going to use? And if the answer from your bookkeeper is, oh, I'm just going to do it based on the activity, you're going to have a hot mess very quickly. So you're the one that wants to dictate, what the chart of accounts looks like so that you know what's going into all of these. So when you get financial statements, you can use your financial statements to improve your business, not just get financial statements to see, what the profit margin was at the bottom. There's a great deal of information in financial statements that you can use every single month to improve your business, and you want to be able to do that through consistent coding. Next slide. So where would you use the chart of accounts? So once you decide what your chart of accounts is going to be, you use that chart of accounts when you program your POS system. As soon as your Toast or Aloha or Micros or any of those guys come in the door to program your POS system, the first thing you want to do is hand them your chart of accounts. So when they get that chart of accounts in their hand, they know what your sales departments are, they know what your payroll departments are, they know what your expense departments are, so they can program your POS system correctly. As I said earlier, you're going to use it when formatting your financial statements. You're going to use it when you're exporting to your payroll company. So assuming that you have general ledger codes in your chart of accounts, you're going to use those same general ledger codes when you set up your payroll system. And now, everybody's punching in and out on the POS system. You can pull that data out and you can export it to your payroll company, and it all matches up, and it saves you from doing, hand entry into your payroll system. You would use the chart of accounts if you're using a business intelligence system like C2IT or Avero. You'd use it if you're using a bill pay system like Bill.com or PlateIQ. You'd use it when you're forecasting or scheduling system that you're using. And you definitely would use it when you're creating a budget or uploading a budget into your financial package or into your business intelligence package. So it's an important thing to establish the chart of accounts so that you're consistent through all of these systems that you're going to be using. I'm just moving around from the sun. Sorry. Let me go this way. I apologize. Sun's coming in pretty strong here.
You're going to be toasty in a minute.
That's okay. As long as you can see me and the screen, that's what's important.
Yeah.
Next slide.
Great. And just a quick question, Jean. Let's say you've been in business for a number of years and you did not establish a chart of accounts using some of those restaurant standards. It's worth it, I'm guessing, to take a moment and perhaps reevaluate that and set up a new chart of accounts so
Yes.
that from January 1, at least, we're coming to the end of this year, you could start fresh or have new analysis.
Absolutely. And we do it all the time. We'll onboard clients that have been with other bookkeeping or accounting services, and they'll have a completely jacked up chart of accounts. So we'll take the data from the end of the year and we will convert it, using a pivot table, usually convert it into a new chart of accounts so that you start the next year with the brand new chart of accounts. So, and it doesn't, it's not fun and fancy like coming up with a new item or creating a new, wine list. It's not as much fun as that stuff. But it's really important, and it actually feels really good once you get all the data flowing the way it should. You're like, okay, I know where everything's coming from, and I know what all these numbers mean. So
great, thank you.
Okay, so budgeting, the budgeting practice has changed considerably over the last couple of years because of COVID. Okay, it was so hard to budget during COVID. none of us knew what was going to happen in, the end of 2020, all of 2021, and then, coming out in 2022. So a lot of people are like, I don't want to spend the time doing a budget because I don't know what's going to happen. So when you say that out loud, it sounds crazy. Like for a business person to say, I don't want to make a plan because I don't really know what's going to happen. What you're basically saying is, I'm just going to run my business from the hip and we'll see what happens. Well, that might be fine unless you own a home and have a family and have kids that are depending on that income to live off of. You should really take the time to try to come up with a plan. The budget doesn't have to be, a massive project for you. The things that are important in a budget are trying to understand what you think your sales are going to be. What do we think our sales are going to be based on the number of people coming in the door, what they spend when they're here, the difference between Monday and Saturday, the difference between Thursday night and Tuesday night, just coming up with a plan and a goal, like we'd like to have these sales. And then being able to track those sales, and say, we're falling behind what I thought we were going to do. Let me take a look at what's happening. I mean, maybe you have a food store out there who doesn't even try to sell dessert or doesn't even try to sell wine. And then that's an action item that you can say, look, we need you to actually try to sell dessert. That's part of what we were trying to do to bring sales in. So I think, looking at it as the sales part of a budget, if you don't do any budget at all, I would encourage you to at least do a sales budget. So you have some goals, for what the sales should be in your restaurant. The next section is doing a cost of goods budget, which is, what do you want your food cost to be, your liquor cost, your beer, wine cost? That's kind of important because that relates to what the prices are on your menu. A lot of people were really hesitant to raise prices. And over the last 3 or 4 months, it was like, well, you never raised your prices, but the cost of the product you were buying went up 20%. So you're basically in a discount business. You're buying food, preparing it and selling it for less than it costs you to buy it. So I think a cost of goods budget is important too. Obviously, a payroll budget is really important, to know what your exposure is going to be on payroll and to know what it's going to cost you on a monthly basis or a bi-weekly basis. Very, very important. And then the other expenses, a lot of those don't change very much, but it's always good to kind of look over, the direct and G&A expenses to get an idea of what you're spending your money on. We believe in the budgeting process. So, if you do call me or email me, you'll get the same lecture. It's a really important process to go through. And by the way, we're doing this right in the beginning of November. So you still have time to do a 2023 budget and share it with your team, your management, and set some goals. So in the budgeting process, starting with assumptions, I kind of mentioned these things. How many days a week are you open? How many hours are you open? What are the sales per check or guest? What's the daily labor dollars, the COGS expensed, and your fixed expense? So I kind of went through this slide before we got to it, but these are the things we think you have to start with, and you have to make assumptions. Next slide. Okay, so we're getting into technology. So in the time that we started this webinar, and by the time we finish this webinar, somebody else will have created some new app, some new software, some new technology for the restaurant business. I mean, it never stops. It just keeps coming through. So, for us, like at our firm, we probably beta test 3 or 4 different restaurant technologies a month. We get people reach out to us because they know we have a big restaurant practice and they ask us to test a piece of software. I'll give you an example. I got contacted earlier in the month by somebody who said that they had developed a software that would reconcile all third-party transactions. So all like Uber, DoorDash, So it would monitor all the transactions, and then it would reconcile the transactions to make sure that our clients were getting paid the proper amount of money that, DoorDash and all those third-party guys owed. So that sounded like, oh my God, that's going to be an amazing piece of technology. We got to look at it. So we did a quick beta test on it, and it doesn't work because the company that developed it doesn't have integrations built to the point of sale system. So we weren't able to track it from point of sale to third party to, payment into the bank. So what we're always looking for in technology is that all the technology that we're using talks to each other, that they have an integration built and they talk to each other. So our basic technology map, this is an example of one. Our basic technology map starts with a point of sale system, and then usually has a business intelligence software sitting in there, and then has an accounting package where everything lands. And then on the outskirts of it has a bill pay system and has a payroll system. So it's only got 4 or 5 boxes there, POS to business intelligence to accounting package, okay, and then bill pay system to accounting package and also to business intelligence. And then payroll is business intelligence to the payroll company to the accounting package. In this case, on this example, the accounting package is QuickBooks, and it's showing you how everything in that center is integrated with QuickBooks, and it's all dumping into QuickBooks. So don't go for the new shiny tool that you see being advertised all the time. You need to be smart about, what technologies you're going to use. They all need to talk to each other. And by the way, when you start doing this and you have like a piece of technology and you'll ask them, does it talk to QuickBooks? They'll say, oh yeah, it does. Then you find out afterwards that it doesn't talk to QuickBooks. You have to go through a whole download, upload, export, import process to get it to talk to QuickBooks. That's not called technology. That's just called dumb. Okay, so, if you ever have any questions about technology, feel free to reach out to us. But technology is a way for an owner operator of a restaurant, owner operator of a restaurant to be able to do their bookkeeping and accounting in-house and keep their expense low. And if you use technology correctly, you can get that done, and you can create a lot of really good data to help you run your business. So we're big technology proponents. Next slide. Here's another example, very simple example, okay? It's going from the point of sales into a business intelligence piece. They're using Plate IQ to pay bills, and everything's getting dumped into QuickBooks. So the only thing that's missing here is the payroll piece, and that could be any payroll company. Almost all payroll companies of any significance already have exports built to and from QuickBooks. So the bigger ones, Paylocity, Paychex, ADP, they all have exports built. So next slide. So this is kind of what you need. If you're going to look for bookkeeping and accounting, whether you're hiring a bookkeeper in-house or you're hiring somebody outside on your external chart, you need to get your bills paid. You need to get your bank recs done. You need somebody reconciling statements to make sure that you're getting your credits and you're not overpaying your vendors. You need to get financial statements for sure to help you run your business. You need to get all your sales tax filings done and get them done accurately and correctly. And then you've got your end of the year state and federal tax filings that need to be done. And then you've got a bunch of filings in here that have to be done every year for every business owner in California. The 1099 filings, the 8027s, 571L filing, and your whatever city you're operating in, the city business tax filings. So keep in mind that there's lots of people that know how to put things into QuickBooks. but that doesn't make them a bookkeeper or an accountant. Okay, you need to have resources that understand, oh my God, we've never filed 1099s, and there's exposure there, or I don't know whether I'm supposed to file an 8027, right? So, have good resources here to make sure that you're staying within that fence that I talked about at the beginning. Okay, I think that's it.
You did it. What great information. Thank you, Jean. And thank you for offering to field any questions. The next slide will have our info email for everyone. You can reach out to us and we'll connect you over to Jean if you do have some questions. But I think the practical information here is that it's really about setting your business up for success. No matter when you started your business, it's still good to put these practices in place and take the time, if you haven't done some of these things, to do so now so that you can be stronger and better as the years go by. Especially after coming out of COVID, I imagine, Jean, this is really important to kind of take a moment to reevaluate.
Absolutely. And a lot of people, most of the people that will look at this webinar know that what they're paying their employees now is hugely different than what they were paying them before COVID. So taking time to do that internal chart and understanding what the expense of all these increases, every manager wanted more money, every cook wanted more money, every, hostess wanted more money. So you have to kind of reset the table on that and say, okay, what is this going to cost me to run the business this way? A lot of people, normally we'll get 20 or 30 clients that want to start their budget, before the end of the year. It's not a process that everybody looks forward to, but this year we're just getting hammered with requests like, need to do a budget, we need to do a budget. So, we're working with a lot of clients right now, building the assumptions for the budget and then actually putting the budget together for the client to review and then finalizing it before the end of the year.
That's great. Yep. We go through it as a foundation as well. Budgeting process, not always fun, but you've got to know what you're working with and what your goals are.
Right.
Excellent information. Thank you, Jean, for sharing your expertise and your time with us this morning. Really appreciate it.
Okay, great. Thank you so much.
Thanks. And next up, everybody, on January 17th at 9:30, we'll be back live. We're taking a little break for the holidays. And we're bringing in Matt Sutton. He's the Senior Vice President of Government Affairs for the California Restaurant Association. And he's going to talk about some new laws that are hitting the books and things that you need to be aware of in terms of compliance. Of course, we'll allow for some Q&A during that session as well. And you can follow us. Here are our Instagram, Facebook, and Twitter handles. And again, this contact resilience@restaurantscare.org that I mentioned earlier if you do have some questions or want to get some information to us. So with that, I will thank you very much for participating, Jean, in this, and for everyone watching this. I hope you get some great information and set your 2023 off to a good start. Have a happy, safe, and prosperous holiday. We look forward to seeing you back in 2023. Hard to imagine that's where we're going to be next. Have a wonderful holiday season again, everyone, and thank you so much. Bye-bye.